Okay, on the fundamentals of the market now, we have Ajay Bodke of Prabhudas Lilladher and V. Srivastav of UTI MF joining in for a discussion on what their view is on the markets. Afternoon, gentlemen. Ajay, I'm going to come to you first. We're going to kick off earnings season tomorrow, full-fledged with TCS and then Infosys and Reliance on Friday. Your sense in terms of what the IT space will do this time?
Good morning. I think we believe that the IT companies should post results which should be above market expectations. I think we already have kicked off the earnings season in IndusInd Bank. And I think the numbers of IndusInd Bank have been, in our opinion, better than what market was expecting. And the outlook that they have given also has been fairly strong in terms of the 3-year perspective that they gave on how they intend to improve their ROAs as well as increase the CASA. Insofar as Infosys is concerned, it remains one of our top picks, and we are expecting that the company should easily post a revenue growth of around 17% for FY17 and an earnings growth of around 15.5%. So I think that is what our sense is on Infosys. Our preference remains with Infosys over TCS, and in the mid-cap space in IT, I think Hexaware is one company where we feel that both the June quarter and September quarter should post very strong numbers.
Okay, should post good numbers. Ajay, hi. Good morning. What's your call on stocks like ONGC, for example, right now, and Oil India? We have seen after a long time some traction coming back to the upstream companies. Do you think these stocks are good for more, or would you recommend profit booking now?
Yeah, I think I would be looking at these stocks with a medium-term perspective now. Because the government's announcement of reforms on the kerosene side, I think makes me believe that even on the LPG side, I think the government would take a measured approach going forward in terms of very small incremental monthly increases as recommended by Kelkar committee a few years back. So I think that allays apprehensions on some of the subsidies that they have, upstream companies have to bear. And bear in mind that the OMCs have outperformed very strongly over the last 15 to 18 months. And hence, any up move from here in crude prices, I think one will have to start looking at taking some profits off from the OMCs. So I think it's time to have a relook at the oil portfolio, focus more incrementally on the upstream companies, and be slightly looking cautiously on the downstream companies.
Ajay, what's your call on some of the high beta names? For example, real estate stocks have done well, metal stocks have done well over the last few days. Do you think the space is still going to make money for shareholders?
Yeah, I think, we have seen a very sharp up move in these high beta names. And progressively, I think, I'll be very worried. I think as even Ashwini mentioned in the previous section, I think even fundamentally, I feel that one needs to tread very cautiously in some of the small caps and mid caps names where one has seen a very sharp up move. And it's not time to be adventurous at the current juncture. The market might digest this up move, might even show some correction. And it is this space which could see a savage correction as compared to some of the large cap and more steady names. So I think I'll be very wary of the two spaces that you just mentioned.
Okay. Mr. Shiva?
Ajay, what about stocks such as BHEL? It's given returns of around 12% on a month-to-date basis. But if you look at the fundamentals of the stock, it's been dismal. FY17 also, as per analysts, post Q4 was expected to be a loss-making year. And there's a little bit of fillip because of that Bangladesh order that they've won, which is around $1.6 billion. Do you think there's a turnaround story which we might be staring at for BHEL?
I think we remain negative on BHEL with a medium-term perspective. I think we believe that, as you said, the fundamentals still look wobbly. And hence the up move that one has seen is entirely due to the fact that there's a lot of liquidity sloshing in the market. And the fact that the stock hasn't performed, I think has made some investors to look at it for a short-term pop. But I don't think there's much fundamentally in BHEL at the current juncture. And if at all in the infrastructure space one has to look at, then there are far better opportunities. I think, although Larsen and Toubro also has moved up very sharply, but on dips, I think then investors could possibly look at getting into Larsen and Toubro or names in the power transmission side on the road construction side. But BHEL certainly, I think one needs to stay away from.
Okay. Mr. Ajay, if you had to pick out, say, two mid-cap sectors, or maybe even stocks, if you can drill down to it, which could possibly outperform in terms of earnings this time, which ones would it be? And if you could also pick it out from the Nifty space?
Yeah. In the mid-cap space first, as I mentioned, on the mid-cap IT space, I think Hexaware Technologies looks poised for very good performance for the remainder of the year. Both the June and September quarter in particular, I think will be pretty strong for the company. We are expecting a strong revenue as well as bottom line growth and improvement in margins for Hexaware. In the mid-cap pharma space, I think Jubilant Life Sciences, I think it looks very attractively poised with a medium-term perspective. The company has a strong franchise in the radiopharmaceuticals business, one of the few Indian companies that has that franchise, has presence in America, Europe, and one very important product called Ruby Fill in the radiopharmaceuticals business. The approval should be coming anytime in the next quarter or so. And the launch should happen in third or fourth quarter of the current financial year. That could give a strong fillip to earnings for the company in this year and next financial year. So that's why Jubilant Life Sciences looks very well poised from the medium-term perspective. In the large cap space and in the mid-cap cement space, I think there are two names I would like to highlight. First is Heidelberg Cement and JK Lakshmi Cement. Both of them will be showing very strong EBITDA growth for the current financial year. Both are available at significant discount in terms of EV per ton as compared to some of the other more fancied mid-cap cement names. In the large cap space, I think Britannia, should be a beneficiary of the 7th Pay Commission award checks that should flow. The company is improving its distribution network in north and east, where it is has a lower presence as compared to south and west. And company is expecting some improvement in volumes also to be complemented by improved pricing power once a good harvest comes in. In the banking space, as I mentioned, IndusInd Bank and Yes Bank look extremely strongly poised with a 1 to 2 year perspective.
Okay, fair enough. Ajay as well as Mr.